You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this here ever-expanding Options Insider Radio Network. Quite a few programs on the old network. Where can you find all of this goodness? Well, maybe I should say it the right way one more time. Where can you find all of this options goodness? Well, of course, good place to start. The HQ, the flagship, the centerpiece of all things options, theoptionsinsider.com. Click on over there. Click on some stories, read some articles, read some breaking news on the options market. Go crazy, have fun. And while you're doing that, maybe afterwards, click on the old Insider Radio Network tab. You can download or stream any episode of our thousands of hours of content up there for you. It truly is an options extravaganza. If you haven't been up there or checked it out in a while and looked at the full depth of our records and our archives up there, it is almost overwhelming. So take your time, go slow. But there's a lot there. If you have a topic or a discussion point you want to find, chances are there's something up there. We've probably hit on it in the thousands of hours of this radio network. And if there's not, let us know. Maybe, perhaps, it's something worthy of consideration. Chances are you probably already gotten to it before, but perhaps not. You never know. And, of course, you can also find all that radio goodness. iTunes, TuneIn, Stitcher, pretty much wherever you find your favorite podcast programs, including our mobile app, available for iOS, Android, and indeed the Fire OS. Some people have written in saying, hey, you're going to get some of the website content into that mobile app, and we're toying with doing that. So the problem is different providers. The radio's on one side, the website's on the other, different systems, WordPress, CMS, Libsyn, et cetera, et cetera. A lot of behind-the-scenes nonsense going on there, but perhaps we'll marry the two together one day. You can get all your Options Insider goodness. Right now, the mobile app exclusively for the radio, but it makes it easy, particularly for you guys out there on Android who are always complaining, I have to go buy Podcatcher or Pocket Cast or some of these other ones out there. Just get ours for free, and you get all the shows right there. You can build your own playlist. You can do whatever you want. If you don't like any of the shows Andrew is on, you just skip those and build in your own playlists. You can download, you can stream, you can do whatever you want, and you can also ask your questions right there from the app too, which is also pretty cool. Check it out, Options Insider Radio Network app, pretty much wherever you find your mobile apps, except for the Windows App Store. It's the only one I think we're missing. Everything else we pretty much got there. All right, and joining me on the old program today on this Monday, kicking off this trading week today on September 14th, for all of you playing the home game, I am joined by the one, the only, the Rock Lobster, beaming in from the hinterlands of Maine. His appearances on the network a little bit truncated these days now that we have the old Options Oddities in hiatus, but don't worry, listeners, for all of you who can't get your Rock Lobster fill on a daily basis anymore, he's back here on the old program today. We're working on getting him back on the network on a daily basis sometime soon, so stay tuned for that. In the meantime, Mr. Rock Lobster, welcome back to the old Option Block program.
By the way, I got some umbrage at the beginning.
More umbrage already? Here I am heaping praise.
Just skip over my club. You skip over my show, and then
that's true.
And then but then you threw the praise back.
I do give with one hand and take away with the other. That is kind of my way.
I was about to say that's how it rolls here in the Options Insider Radio Network. What we give with one hand, we take away with the other. But I am fine on what is quite a lovely, almost fall day here in Maine.
Ours is actually pretty balmy. We were getting a little warmer today, which is nice. So summer not entirely done you don't have to give up on the shorts just yet here. We got a whopping 2 months of shorts time here in Chicago, which is good for us, considering we were wearing jackets all the way through the July 4th weekend here down there. So some are a bit truncated this year, but not to worry. We still have a few days left before it gets into the doldrums of weather. But this is not the weather cast. No, it is the option block. So without further ado, it's time for us to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our eyes in today's market activity. And if you are asking yourselves, hey, how come there's only a twofer on the old show today? Where is good old Uncle Mike Tucson? Unfortunately, he couldn't make the show today. His father is actually having heart surgery today, so our thoughts are with him. He would certainly rather be here on the program, but indeed he has to attend to those. So if you are in contact with Uncle Mike, maybe send him your best wishes. I'm sure he could use them right about now. Meanwhile, we'll keep on rolling with the old show. It was another interesting day on the old street, perhaps not as movement heavy as some of the days we've seen of late, at least from an end of day perspective, but still some rocking and rolling to be found out there. Most of the major indices down on the day, though down not explosively. You're not talking the 20-plus handle move in the S&P or the 1,000 handle move in the Dow. No, we got about 12 handles in the S&P off to the downside, hovering right around that 1949, 1950 level in the S&P. The Dow off about 60 handles, so very quiet day from a Dow perspective. It seems like Dow these days, Mr. Rocklop, just making all the headlines from a movement perspective. Everything you see, technicals, etc., the records from a couple weeks ago, everything is Dow. So all of a sudden, everyone's got their eyes focused on the Dow. So far today, not really living up to all the hype. The NASDAQ also off about 16 and a half handles, hovering right around 48.05 or so. And of course, with all that red on the screen, that means vol ticking up a wee bit, up about 24 and a quarter, getting some of that weekend back. Of course, we also have the Fed imminent later this week, a briefcase watch or purse watch, whatever it is, with a lady Fed chairman. I don't know, lady Fed chairman, a chairwoman, to use the proper terminology. We'll see what that is, and of course, everyone's waiting for that. So we'll get into that in a little bit. But first, before we go any farther, Mr. Rock Lobster, what caught your eye in today's whirlwind, indeed explosion of activity?
Yeah, I think all my clients were, if we're looking at buying time spreads to close on Wednesday, there's not a lot going on.
A lot of snoozing in the old pit chat today.
There was a lot of snoozing. I just think I don't know why, but for whatever reason, I think the market wants a reason for the volatility to end, like the higher vol future numbers. So they've decided that whatever the Fed's going to say is going to be a reason. Anyway, I think that is the reason, by the way, where everybody's like, okay, well, China's not, I guess, going to go fall into a recession. Everything's going to be awful. I just, for whatever reason, the market needs a reason for the vol to come in normally, and maybe this is it. But as far as that goes, the only thing I would say that was the most fun for me, at least last week, but coming into this week, is that Standard & Poor and Moody's both downgraded Brazil to junk debt on the same day. So right away that's the bottom for that country.
You diehard contrarian, you.
Well, it's just, they downgraded the U.S. debt, which they should have, because the U.S. could not get their act together, right? It was a great shot over the bow. But I think that was probably one of the short-term bottoms for U.S. Treasuries. We haven't seen that level since. So I'm only being contrarian because, the I guess the EWZ, which is the ETF, it's what the 3-year low was high was $80, and now it's trading 23. So, you need to downgrade them when they're trading 83, not 23.
Yeah, those rating agencies tend to be a little bit of a lagging indicator, I think is what you're trying to say. I'm putting it in a more euphemistic fashion than you.
Thank you, but yes, they are. So, when I'm looking at stuff like that, there's not a lot going on. And we just have a market, I think, that's going to go sideways at least until Thursday, when the Fed, says whatever they're going to say. And I don't know if we really go ripping right back higher again, but I think there's enough like, well, there's a little bit of bloom off the rose as far as economic growth goes. Everybody's a little worried about China. That until China starts putting up, we could see some higher numbers. But without kind of that real stimulus rally thing happening, I think we're gonna go sideways here for a little while. I don't think we see the highs of the year again.
Yeah, I think that's certainly a consistent refrain out here. Also, a lot of concern out here in the broad market as we get to what we're looking at. I'm sorry, I was just distracted by all this Qualcomm information out here. Qualcomm. We'll get to that in a little bit, but of course, you're right. A lot of indicators certainly of interest. We were talking a lot on vol views last week, Mr. Rock Lobster, about what impact, if any, the Fed doing something this week will have. And we've kind of, you and I have joked on the show before that, all this talk about the Fed's going to put a gun to the head of the market and pull the trigger, and we're going to be in free for all tailspin. Worst case, it probably is only 25 basis points. It's not going to end the world, but some people are certainly acting like it will indeed do just that. Some of that, of course, like we said, due to our frame of reference, we haven't had a rate increase in quite some time, so any increase is a bit of a shock to the system. And I guess the other side of that is, of course, how long will it take for the market to digest that and spit that out? We'll probably see a bit of movement post-Fed if they do act this week. And then, of course, we'll see probably a little bit of vol in the near term. Then it probably will come off because, like everyone's thinking, it seems like that bid in vol right now is a lot of it is attributable to the Fed. And so perhaps we'll see it come off by the end of the week if all this kind of Fed will they, won't they. I think as Uncle Mike has said on the show before, he wants them just to do something at this point. He doesn't care what it is. Just do something to get all this kind of fluff out of the way so we can get into what's really going on, what's really moving the market. But still, interesting stuff afoot out there. For those of you out there who pay attention to such things, of course, the vol is cooking out there. A lot of people like to comment. We talked about this before, Andrew. We've kind of taken somewhat of a dim view of it, and maybe not a dim or dismissive view. Just I think it seems it's a little bit too widely. There's probably two things I could lump in the overly quoted in the general media when it comes to options indicators. One is the triple/quadruple take your pick witching, and the second is, of course, put to call. And we kind of seem to have both of them getting lumped together a lot these days, particularly this week. A lot of people were going on CNBC and others about there's, of course, there is a triple witching or so this coming up in September, of course, and then that's going to lead to a lot of perhaps crazy movement. Some people say, I know we've kind of played that off here on the show in the past. We won't get into that again, but still. And of course, that could be perhaps leading into, we're seeing, of course, we saw the big rally last week, and that is, of course, impacting the other awfully quoted indicator out there, the put call, which is on the wane a bit of late. Of course, if you've been watching these indicators of late, it's below. This is the first time in a while we've seen the put call out there in SPY, not the big SPX, but SPY, but still the paper tends to follow each other, so they track pretty close. Dropping below its 20-day moving average. This was on Friday, of course, so it's changed a little bit today, but not a lot going on today, so not too much. Again, with that rally, and of course, a little bit of a rally today. Again, it's going to lighten up a little bit on the put to call. It's about hovering at about a 1.5 ratio right now, which is again well below the 20-day moving average. We saw a bit of a drop in put volume also on the rally, a pretty decent increase in call volume. That, of course, pretty much accounting for the lion's share of that change. Some people, again, attributing this to some of the expiration stuff going on this week, or also just the rallies and, of course, the Fed. Everyone playing will they, won't they on the Fed. Mr. Rock Lobster, a lot to chew off here and perhaps debunk, including two of our favorite things, triple/quadruple/8 bazillion witching, I don't care. And, of course, the put-call ratio. Do you put great stock in either of these, or are you more of a, do you fall into the debunker type category?
I'm going to lean toward the debunker. I mean, you've got there's a little more volatile, but most of all the active future stuff is already rolled. I mean, there might be some options expiring, but I think most of the rolls have already been done. They've already rolled the futures, at least in the S&P 500. I mean, there could be some, there is certainly the potential this time for some crazy settlement in the SPX, by the way. You've got, Thursday Fed, and you have, since SPX is the SEP ordinary. We have the you've got morning settlement. So who knows what could happen there? That could be exciting. So you could see something from that. As far as the put call ratio, we look more at the skew and then how much people are buying for it, and then whether it's just whether it's interesting to sell or not. As far as put call ratio goes, it's hard nowadays to get anything out of that because there's so much put buying and hedging, and a lot of people are sort of backspreading their put purchases now, things like that. So it's kind of hard. I think people right now buy options. They want the move because they've been skewered in the past by all the crazy moves we've had up after these Fed announcements. So, I'll just say I'll stay in the debunk camp for this one. I will be a debunker.
How did I know you were going to fall into the curmudgeon role on the show today? But we need it, because I'm so bright and cheery. We need someone to be the other side of that coin. Of course, the diehard contrarian / fundamentalist / curmudgeon.
Yes, you are the sun. You are the sun to my black hole.
Yes,
I guess.
Deep, dark, inescapable black hole.
Deep, dark place.
All right. Yes, I kind of felt you were going to lean that way. Of course, I tend to fall that way myself. Whenever I hear people throwing that stuff around, I kind of tend to cringe a little bit, often because it's so misquoted, and also it's given importance that it really doesn't have the witching these days anymore. But your point about about perhaps settlement may be a little bit exciting somewhat this year. Could be, or this week, this month, could be an interesting one. Moving on, Uncle Mike isn't here, so we have to do his resident fruit company talk for him. And of course, they had a bit of a rally day today, getting some love as people were saying, I love how this data comes in so quickly. But the pre-orders for the iPhones are on pace to exceed last year's first weekend sales of 10 million units, which is exceptionally strong initial orders. So Apple never won to avoid an opportunity to thump their chest, toot their own horn, and they're doing so here. Stock could probably use a little bit of a boost, so I can't really blame them closing today a little bit north of the 115 range. So getting a little bit of a bump, but not a lot of love. Certainly not a lot of love in the options realm right now. Only doing less than 250,000 contracts today. That is, if you know Apple, that's anemic. From an Apple perspective. Of late, granted, these are rocking and rolling numbers. The market's been moving of late, but it's been averaging nearly 1.1 million contracts a day. So today and Friday was pretty anemic as well, doing about a quarter of that, which is pretty light volume. All that is translating as well into not a lot of love from an overall options perspective. The total options open interest hovering right now at just about the 54th percentile right there. So it's pretty much right in the middle of the range, but overall pretty light. From an Apple perspective, and certainly in light of what we've seen of late, it is Apple people kind of waiting, like Uncle Mike maybe as well, kind of indicative of that, kind of waiting for the other shoe to drop out there. Maybe perhaps he's often joked about his innovation index, but some people are perhaps waiting for the big thing to come out of Apple, and not literally the big thing like the big iPad Pro, but the big innovative thing that's going to make the stock hit that next wave of innovation, or perhaps and perhaps that next wave of upside that's everyone's looking for? Or is it perhaps the kind of more of the mature Microsoft era over there now, where they're kind of just going to be paying dividends and not really going to be rocking and rolling as much? I don't know. It's been a quiet week, Mr. Rock Lobster. Anything of interest out there in Apple from a pitch chat or from a mentee perspective this week? Or is it kind of one no one over there is even watching, which, if that's the case, is also indicative of perhaps how little interest Apple is garnering these days?
Right. We have we looked at some flies and things like that in Apple. The vol's gone from 50 to 30, and 30 used to be a pretty good sale. So that will just tell you how much interest there is in Apple right now. There's still, we thought, some sort of butterfly action, something that's maybe a little bullish, but it looks like it's kind of holding. It's kind of holding up, actually. It's sort of, and it's considering all the other names that that are flying. I mean, Apple's come off from its highs, but it has made a bit of a move back, a pretty nice move back, actually. So, I mean, realistically speaking, it's holding up better than a lot of stocks after the what we'll just call it. I guess it's like the quickie flash crash,
Yeah, that's one way to put it. A lot of people lumping that big day back on the 24th as mini flash crash call it what you will. Yeah, and certainly that was the day of the infamous 75 puts for $1. Oh, the 75 puts. The tales of yesteryear, the ones that got away. That one got away from a lot of people. And I think both of us here included. You had a little more time to try to get yours than I did, but still, both of us unsuccessful. You were trying that put spread, I believe, right? For like 60 cents, something like that?
I was looking for the 65, 75 put spread for 45 cents.
45 cents. And wasn't it 40 bid? And you said, the old market maker in you came up, reared his ugly head, and said, I will not hit a bid. And look what happened.
That was it.
That's amazing.
And then the vol quickly went down 15 points.
I only laugh because I share your pain. I have that exact same reaction. I have to find myself overcoming that sometimes and saying, this is the best price. I should take it. This bid's not going to be here for long, or vice versa. But yeah, you're right. There is something innate in you that just says no. I refuse to do that. I'm not a sucker.
I know, but yet somehow you just gotta hit the bid when you have the shot. That's all. Unfortunately, that's what it is.
So if you miss the trade, it becomes a teachable moment, right?
Yeah, exactly. selling options that are 25% out of the money in Apple are probably, what I was thinking, it was almost like the cash line, because Apple has so much cash. Valued the business at like $150 billion.
I joked about that on the show, but it isn't that far from the truth. Some people took umbrage at that, but it isn't that far. They're sitting on bazillions of dollars in cash. I haven't done the math. I'm sure some analyst out there has to what that equates to as a share price, but and I'm sure it's not 75, but it's a decent amount, and it gives you enough cushion on that put to let you sleep at night.
I think there was some cushion in there, but what are you going to do?
Well, the other one that's been lighting it up of late, we haven't talked about this one in a while, is good old Baba. They kind of took it on the chin. Alibaba, of course, taken on the chin from Barron's this past weekend. Pretty nasty article saying the stock could face another pretty much cut in half. They're saying the Chinese economic struggles, and they're saying there's growing competition over there in China from an e-commerce perspective, as well as some cultural and governmental issues causing scrutiny over there. All of that could combine to really curtail the massive, some may say excessive growth story that has been the story of Baba, closing today at 62.60, off about $2 or a little over 3% on the day. And this is kind of just the tale of Baba of late. It was trading almost 65 going into the weekend, 64.5 or so. And then Barron's conspired to cut that down a peg yet again. And this one's kind of been vacillating of late. Of course, if you go back to early, actually not even early summer, mid-July, so kind of midsummer, it was trading above the 80 handles, trading about 84. So this thing has lost about a quarter of its value just in the past few months. So that's a pretty rough road for all the Baba bulls. And when it launched, and everyone was pretty gung-ho about Baba's chances, and we saw kind of for a little while there kind of that same zealous skew in the calls that we used to see back in the go-go Apple days. That since has come off, I think, thankfully, given what we've seen of late. Things a little bit anemic out there today as well. Only about 36,000 contracts going up compared to average about 150. It's just kind of a light day across the board today. Even with all this news coming out about from Barron's and everything else like that, you think that would have lit it up, and yet not so much for all of you out there who play the put-call game. I'll give you some grist for the mill. It's been averaging a little bit south of about 0.95 of late. And today, or so far today, if you look at it's about 1.3. So read that how you will. If your put call is a contrarian, then perhaps you want to dive into Baba right now. If you believe in the heart of the put call being bearish, then perhaps you want to short away till your heart's content. One thing I did notice of interest, Mr. Rock Lobster, is the number one position out there in Baba from an overall open interest perspective. I was just doing a scan this afternoon to see kind of what was coming up, what was lighting it up in Baba. And the number one overall open interest month and strike. I'll let you take a guess because maybe you haven't had a chance to read the show notes, so you didn't cheat. What would you guess is the most popular month and strike in overall open interest in Baba right now?
Well, I could cheat, but I won't. I'm gonna say,
if you were Mark, you would be scrolling right now.
Because I have it in my inbox, and I'm like, I'm going to say, what am I going to say? I will say the December 65 calls.
Interesting. And that would be, I like, you're getting right from a time perspective, but you're a little less optimistic than perhaps you should be. Remember I said the zealots are out in force not that long ago.
That's right.
So Jan's a little bit past that. Jan 2016 par calls.
Oh,
73,000.
huh?
73,000 open on that strike. So I'm going to hope that was some aggressive overriding. Even still, wherever that stock was where you wrote that, ain't going to help you at this point. But yeah, let's just hope that was at the case and not the just the zealots swinging for the fences. Of course, again, early midsummer, that didn't seem that far off, and now that seems like a wishful hope and a prayer out there. And yeah, it's all upside love here, long-term upside love. The next closest, the Jan 90s, 53,000, then the Jan 95s with 47,000. You got to go all the way down to number 4 to find a put. And those are in the money now. OC 75 puts. So
I'm going to the show notes now. Going to the show notes.
Yes.
I'm looking.
But yeah, it's.
I glanced over them ahead of time, but oh my
yeah,
God.
if you look at this is these top 10 positions in BABA. It's a tale of optimism gone wrong, pretty much. 95s, the OC 90s, Jan 120s, 30,000 open there. Yeah, it's kind of a sad tale. Nothing even close to what you're talking about, a reasonable 65 call. That's far too reasonable, sir. You're not in the mind of the typical BABA investor, clearly.
Of course, that's my problem. I can't. It's viscerally difficult for me to buy options out of that far out of the money. Doesn't mean it can't work, but it's sometimes it's
not for these guys apparently. Jan 120s. Wow, that's old school optimistic right there.
You know what's still amazing is the market cap of this company, is still $160 billion.
Well, according to Barron's, it should be a whopping 80.
Wow, I guess so.
Still expensive at that level.
Yeah, but again, the article comes out at $60 and not at $120 where it was September. So how about all those sad Yahoo holders? The people that own Yahoo, that stock has done the big zero this year too.
Well, the one thing that was moving Yahoo was its stake in BABA, and so much for that.
Nothing now.
So much for that. It's going to start dragging it down now. It is kind of funny. The thing only shed about 3% on a pretty bearish article in a pretty major publication. So maybe the bears are just spent out here. They can only shrug off another 2 handles out here. You think an article from a major publication saying your stock should be cut in half would merit a little more than that, but perhaps not. Interesting stuff.
It's already been beaten up, I guess, enough. That's
I guess. It's not like it's Zero Hedge, where they're going to be extreme. This is a relatively more level-headed publication, and yet still not so much. But since we're in the realm of looking at open interest and putting call numbers anyway, let's just keep on rolling right on into our next segment. I know you're all waiting for it. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old Odd Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was lighting up the old options market today. I'm going to kick things off, actually, before we get into today's activity. You remember on last show, listeners, we were talking about a flurry of very, very near-term upside love for Qualcomm, and we were kind of speculating why would there be such a furious furor for calls. It was the 55 half, the double half calls. Don't see that too often. Going up for size. People were buying a total of 12,000 on the day last week, paying about 66 cents or so. It seemed like someone spec'd that something was coming in Qualcomm in the very near future. And it may have come today, and it may not have been exactly what they expected. They said today, Qualcomm, they acquired privately held medical data management company Capsule Technologies to expand their Qualcomm Life subsidiary. And on the news, lo and behold, when you're buying something, stock tends to sell off a little bit. Not a huge sell-off, only about half, a little over 0.5%, though, about 35 cents. So the stock trading south of the 55 half strike right now, actually about 54.30 or so right now. So all of that love for those very, very near-term double half calls, at least so far, seeming to go for naught. They were a buck bid or close to it at one point. So the stock nowhere near 56 half right now. He's got a little bit of time left, but yeah, not so much, Mr. Rock Lobster. Sometimes we profile these guys and they're piling in. They seem to have the inside track on something. And unless there's another shoe to drop here that we're still waiting for out in Qualcomm, in which case our friend could have waited a little bit more too and saved himself some money. But still, yeah, not always the size money is the smart money or perhaps the well-informed money, as this appears to show, Mr. Rock Lobster.
Yes, it was. It looked really good for a while, and now it is just sort of. It is. What would you say? That word? Meh, meh, meh.
A resounding meh.
Yeah, and that's kind of. That's
I don't have it up right now. Do you see how where these calls bid now? How much is our friend off?
Let's see here. I have it pulled up. Where's this? Oh, all this. They're 43 cents right now. They're still they're kicking.
They're still bid, but I think he started off trading 66 cents, so he paid more than that to begin with, and then he got up to nearly a buck as his frenzy just drove everyone else into a froth. And then I think he's regretting that now. Well, yeah, there still is time. Something could happen, but at least for the near-term announcements, people are always writing in saying, "Hey, what happened with this? What happened with that?" Here's a quick one for you. And so far, at least, let you sleep at night feeling the pain of others. Make your pain and misery that much less by comparison. See, we do our due duty here, our due diligence, our duty for God and country here on the old odd block, and relieve some of your own trading pain, or I should say trading pain. Let's move on to what we saw today. One of our old friends. I haven't talked about this guy in a while, Mr. Rock Lobster. This is off away from our typical realms of tech and cheapy biotechs and petroleum, and off to the land of never-ending alcohol consumption, a.k.a. Anheuser Busch Inbev, or Bud, ticker symbol BUD, closing today 106.40 or so, off about $1.15 or a little over 1% on the day. This is the name that's averaging about 3,100 contracts a day, doing a little bit more than that today, doing about over 11,000, at least 11,000 going up in this first chunk of the DEES 115 calls. So a little bit longer term, a little bit out of the money, but certainly not as exuberant, perhaps as irrationally exuberant as our friends out there in Baba were earlier. But yeah, the DEES 115 calls going up. Paper buy-in looks like opening as well. Open interest only 200 and so contracts. So clearly opening of these DEES 115s for $3.10, going up in one mega block over on the ISC. They pretty much straight lifted the offer. So this guy wasn't messing around. He said, "What's the market? Okay, I'll take it. I'll take all that you got," to the tune of 11,000. Looking at a recent chart of good old InBev just a few months ago, it was sailing well north of that, again into the midsummer range of mid-July or so. It was trading near 130, about 128 half or so. So these 115 calls for 310, our friend deciding, the holidays are coming up. People like a beverage or two around the old Yule log or whatever your holiday of choice may be. And he thinks that's going to pop good old Bud up. Mr. Rock Lobster, walk us through what's your take on our friend buying all the Christmas calls he can get in Bud.
I think that is we were discussing, that was trade actually one of the more interesting looking ones that we saw today. Because it didn't look like there was tied to stock. It just somebody's bullish and thinking, all of this, everything that's happened over the last month, everybody's going to forget about it, and they're all going to want to drink some beer. And that's kind of what that trade felt like. Just getting along into the holidays. Because Bud has come back. It looks like it would have a reasonable shot to get back to that level. So that's it's just kind of straight up old fashioned bullish call spread, or bullish call play, straight up call play. So I thought was, reasonable, but again, it's buying a lot of out of the money juice in a really high vol market. So unless something super fantastic happens, I don't know. I do not know on that one. But it looks like it has a decent shot.
We'll call this the Yuletide cheer trade here, as we'll keep an eye on it for December. Let us know, listeners, if you have your own special end-of-year cheer trade you'd like to put on. Let us know. Meanwhile, we're going to keep on rolling into perhaps the more familiar waters. It couldn't be an odd block without at least delving into the old Texas tea this time, or at least in that realm of petroleum and or energy. And this time we're heading on out to our old friend Chesapeake Energy Corp, ticker symbol CHK. Of course, this is not only our resident energy name today, but also our resident sub $10 name on the old odd block, trading today $7.92, up about 35 cents, or for this name, about a 4.5% move. So rock'em sock'em robots out there today in good old Chesapeake Energy. This is the name that's averaging about 66,000 contracts, and today doing a fair share more than that, I would hasten or wager to say. And a lot of that love coming on the put side of the fence. In particular, the OCK 8 puts caught our eye, and it was kind of hard to miss today if you were paying any attention. This was certainly one of the size plays of the day. The OCK 8 puts going up, paper buying, starting off, about nearly 100,000 in one block, 97,500 paper buy-in for a buck even. I'll have to go back and look, Mr. Rocklobster. We've covered some big size trades here, and nearly 100,000 in one block, maybe one of the largest blocks we've ever seen. I'm trying to think if our friend out there, the VIX whale, does 1 million contracts total, but that's 1 by 2, and he probably does them in chunks. I'll have to see what the total amount is, but for one block with 100,000 or just about, that's close to about as big as it's going to get that someone could actually reasonably facilitate. It also went up with just technically a boatload of shares, of 5.8 million shares going up with it. Looks like this is probably a closer. Open interest is huge on this strike, over 200,000 or just about 200,000. And it looks like someone's coming in and perhaps buying back some puts, buying back some stock to close out a trade. This one, if that is indeed the case, if someone was selling puts and stock here on this handle, it has been relatively, looking at a chart here, it hasn't really vacillated too much from this 8 handle for the past few months. Again, if you go back to midsummer, it was a bit higher. Into the July, it was the 11 handle range or so. But if it was done more recently than that, I think it was, then this guy is looking all right. He's got some decay out of this trade, and now deciding, for whatever reason, perhaps he thinks the quiet period is over, perhaps he thinks he's got other trades to do, whatever the case may be, he's starting to unwind this monstrosity of a trade. Mr. Rock Lobster, what's your take on this guy doing all the puts out here in Chesapeake Energy today?
I know. I looked at that trade, and you look at the volume, and yeah, he did. He traded all the puts.
Yeah, he did all the puts. I'm trying to think. Was the last time we did a one block that was bigger than this? It's been a while.
It's been a while on 100,000, like on a vanilla equity option. I'm trying to think. But overall, it ended up being darn close to 200,000 contracts. I mean, it's pretty gigantic.
Who's the
trade.
broker who has taken this down? This is facilitating 100,000. That's some size. Maybe, I guess they're probably sitting on the other side of it, and they're like, "Oh, we can unwind this now."
There's over 10 million shares. Exactly. There's over 10 million shares of stock that went up too. So
they're like, "We've been sitting on these for 2 months. We can get rid of them."
We really like to take this off now. And well, the thing is, I think the stock scared down to around 6 CHK. It's something we follow in option pit a little bit, just because, okay, this is the bottom for natural gas, and you say that every year. It's a new bottom for natural gas. I think it's just a straddle. It was somebody who sold a straddle that's kind of buying it back. So maybe they're just like, okay, we took our money. And as all good straddle sellers who live to a ripe old age know, you sell your straddle and then you go buy it back when it's cheaper, and you move on to sell something else. So I believe that's what this paper was, as far as I could tell.
Yeah, our friend here deciding to let his broker out of their misery and say, "I'll unwind this for you." The guy's like, "Please, I got so many of these, I'm choking on them." All right, crazy stuff, crazy size. Listeners, let us know if that was you unwinding your 100,000 lot, or perhaps more, actually, as the day went on. As we roll on in to our final name, we're hitting on all all the old favorites of the odd block. We got energy out of the way. Now we have to hit a little bit of tech, even though we did do Qualcomm, so this will kind of be a doubler on the tech side. In particular, our old friend EMC, of course, ticker symbol, appropriately enough, EMC, closing today $24.35, down about a quarter, or about 1%. On the day, this is the name that's been averaging of late, about 22,000 contracts, doing over 2x that today, nearly 50,000 contracts. Looks like about 34,000 or so of that 50,000 roughly coming in one massive roll down. It was the OCK 25-27 call spread going up for 55 cents. Looks like paper buying the 25s, selling the 27s. Open interest negligible on the 25s, sizable on the 27s to the tune of about 37,000 contracts. So surprise, surprise, we're guesstimating here that is indeed a roll down in good old EMC, taking a strike that is, as we said earlier, perhaps a little bit optimistic and rolling it a little bit closer to the fire, a little bit more relevant strike. EMC closing well south of 25 today. So the 27 handle, not really lighting it up for them anymore. The 25 handle, a lot more relevant. This one has flirted all over the place of late, including back in mid-summer or so, hitting up there in about just briefly crossing over the 27 handle. So our friend perhaps thought 27 was a pretty safe bet. Not so much, because once August pretty much rolled off the calendar, this thing pretty much looked down and never really looked back up. Got down to about 24. It's kind of been vacillating around there ever since. So all of a sudden, that 27 bet, that 27 strike, not looking so good. So our friend here seems like they are indeed rolling, and if that's the case, it didn't seem like the 27s really paid off for them that much. But they're saying, hey, you know what? Still like EMC. Just want to get a little bit more relevant strike. So they're still bullish. And now they're a little bit more relevant as well. Mr. Rock Lobster, take us home on this pretty sizable roll down here in EMC.
Do you think he made money on the first calls?
I'm wagering no.
I'm going to think no. I think there again, I'm starting to see paper like this where, okay, we were on a bet on a recovery. That was 3 weeks ago when the vol was sky high, and we haven't had one yet, really. I mean, we're not trading, like 190, 1900 SPX, but, we're not over 2000 yet either. So I think you're going to see a little bit more of this where people kind of were a little early betting on a bounce. And most people were horribly disappointed. And so you should see a little bit more of this kind of paper. I would guess. I would think and guess.
That makes far too much sense, sir.
Yeah, well,
it is called the odd block after all.
I want it to be a little odder than it is, I guess.
Yeah, but usually when they make money, we've seen all the hallmarks. They double down, they do more, they're playing with house money, all those things. Plus, there was really no opportunity. Those 27s never really traded for much higher. There wasn't like this thing spiked to 30 and then traded back down, So, yeah, I don't think our friend did too well on those. And he's looking, hey, I'm going to try again on the 25s. Not the craziest thing we've seen in the odd block. Not by a long shot. Certainly not as crazy as taking down 100,000 of anything in one block. All right, so that's going to do it for the old odd block. We've been gassing on quite a bit, even with Uncle Mike missing in action today. But there's no strategy block, as you might imagine. He is off on dealing with some pressing business. So instead, we'll give you guys a chance to be featured on the show and dive into some a quick here, because we're actually running up against it, mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we take your tweets, your Facebook questions, your all sorts of all the way, your emails, you name it. All the ways you guys get in touch with us, and we answer them here on the show. We'll dive right in. Mr. Rock Lobster, last time you were on the show, you and I were discussing that oft-repeated, there were a couple of mantras they taught you when you first walked on the floor of the SIBO. One of them was the old school, when in doubt, palms out. But the other was always do the hard side first when you're legging a spread, and it kind of applies to life as well. Good advice. We reiterated that on the last episode. And our frequent reader, listener, tweeter, Mr. Mark B, writing in and say, hey, I hope I'm correct in inferring that the hard side is the short side. A couple other people writing in with similar questions. And I could see why they would think this, Mr. Rocklobster, because we always kind of equate here in the space the short leg to anything dangerous and being the harder thing to do. But in this case, that's not actually the case. When you're doing the hard side could be anything. The hard side is usually what you're doing with the spread. So if you're buying it, chances are the long leg is going to be the harder leg and the short leg is going to be easy. Let's take a simple basic vertical as an example. You could be buying, I don't know, at the money vertical in XYZ, and you know the underlying's flopping around quite a bit, vacillating back and forth through the strike, moving quite a bit. You got the higher delta call around the at the money strike you're trying to buy, and then you're going to sell this nonsense out of the money call against it and the thing's a nickel bid at a dime. You know you can sell that all day long for a nickel. That's not the hard leg. The hard leg is the long, meatier one that's bouncing around. You got to work your order. You got to chase it if it takes off to the upside. It's going to take a little more babysitting to get that price done if you do indeed want to leg it. There's no point. You can hit that nickel bid any time. That's not going anywhere. The hard leg is getting that one that's moving around wildly. And that could be... depends on the spread and the environment, what it is. You could be buying some long-term Vega spread, and you could have a lot of issues getting the longer-term leg off for whatever reason. Or you could be doing some funky ratio. I mean, there's a lot of different ways it could go. But in general, it's typically the meatier, either from a delta and gamma perspective or from a Vega perspective, the meatier leg of the trade is probably going to be a little bit harder, requires a little bit more babysitting to get done. Hence, it's called the harder leg. And once you get that done, you know you have a relatively reliable price you can get the other leg off on, whether it's buying or selling. So it doesn't really equate to direction, buy or sell. It equates to kind of what you're doing. And that's the hard leg. And the hard leg is sometimes in the eye of the beholder. Sometimes it's pretty straightforward. If you have two equivalent legs on a calendar spread, it could be anyone's guess which one is the hard leg sometimes, depending on what you're doing. But in general, that's usually how it works. There's no hard and fast rules. It tends to be what the meatier, more difficult one is. Mr. Rocklobster, anything else you want to add on that interesting discussion we had last week when it came to legging?
Yeah, what the hardest side is to me, it's always the one that's kind of going against the market. You know, market's falling apart and you're trying to sell a call. Well, that's going to be kind of hard. But, you know, depending on margin, you just can't enter by via just a short call. So, I mean, the problem with as a liquidity provider, it's easy all to do that stuff. You're like, oh, but as a retail trader, you have to be a little more thoughtful, although, you know, like with iron condors or iron butterflies or any kind of, when you're trying to sell two spreads, you know, the market's tanking, it's pretty easy to sell the put spread. So you try to get a good price for the call spread and then see if you can get an improved price for your put spread. So it's kind of basically whatever whatever side of the trade that's sort of going with whatever the market direction is going to be the more difficult one to get off. If you want to get short in a dropping market, that means you got to get somebody else long. So it's generally you're going to get not as good of prices for that. So hopefully that was useful for people. Yeah, we got some mail, so it must have been semi-useful.
Yes, must have been semi-useful. I'm looking here. We got time for another quick one. These are all long questions. Here's a quick one. Mr. Rock Lobster, I'll let you run with this one. This comes from Jojo. He says, hey, what happens when I sell a call? Does that money hit my account right away, or do I have to wait until I close the position? This is kind of a frequent refrain from newcomers, Mr. Rock Lobster, that they think they can just sell a call, or often sell a put as well. Can I sell this put, collect that money, turn around, use that as collateral or margin for the next trade, and keep selling puts in this endless cycle of short and debt? What do you have to say for our friend here, Mr. Jojo?
Well, you mean you do take in a credit, but you don't get it. So all I can say is it goes against a debit, so you can create a credit balance. But other than that, you don't get, it's not like you get the money right away and you get to go grab it and spend it.
Cut that check, baby. It's the old here puts.
It doesn't quite work like that. So it is, and also thing is you sell something, but you also at the same time have you have the margin associated with it. So you just can't sell a call because it also requires margin to keep the call. So, you get a credit, but yet you have to put up margin. So you kind of take that however you want, and you have to wait till your P&L goes positive before you get to take any money. That's sort of just what the deal is.
Yeah, it's not a funhouse mirror where it keeps going and reflecting back into itself ad infinitum. There is a finite limit. Brokers are hip to that scam. They learned it a long time ago. You can't just take the money and turn it into the next trade. It's locked up, and it doesn't work that way. You can't take the money and cut a check and go off to Barbados. As fun as that may be, unfortunately, it doesn't work that way. All right, that's all the time we have for the mail block. Keep those listener questions coming. We got a lot of them. We'll take even more. We love all of them, even the crazy long ones. You guys like to send those too. Meanwhile, it's going to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Mr. Rock Lobster, a lot to keep an eye on this week. Primarily one big event, that is the old FED. I'll let our listeners spell that out for themselves at home. If you are insistent in other things to watch, there's still the trace elements of earnings going on out there. We got Oracle on Wednesday, FedEx on Wednesday, good old Cracker Barrel on Wednesday. Let's see how many negative headlines they can make by the time of their earnings. And then, of course, Adobe and Rite Aid on Thursday. That's kind of about it for relevant ones. Good old RAD. We love RAD. But the big dog is the Fed this week. You said you were looking at some time spreads in the old pitch chat, Mr. Rock Lobster. Anything lighten up for you, and anything really you're paying attention to going into the Fed? Or are you kind of like everybody else, just kind of playing wait and see and waiting to see what happens to Vol post-announcement?
I'm kind of waiting to see what happens to Vol post-announcement, how the market takes it. And to be honest, I like volatility when it blows up like this. Is like I say, it's kind of like a grenade going off. You never know where all the how it's all going to end, what's going to happen. So as of right now, I just think the market is finally over the shock of maybe the Fed not being able to do anything. And I don't know what that means. I think we just don't see the crazy melt ups, of course, except for maybe Thursday when the Fed says whatever they're going to say. Other than that, I don't see a whole lot moving between now and then.
Yeah, the Fed is the big dog. Keep your powder dry. And keep an eye on some interesting opportunities. And yeah, that is kind of the big question. Everyone's kind of debating if they do make a cut. The market will probably sell off. But then what happens to vol afterwards? Does it get digested pretty quickly? Are we back in, the 12 to 14 handle in the VIX cash by the end of the week? Is this a new regime of crazy volatility in the marketplace and things actually do stay elevated? Maybe the market sells off more than anticipated and we get to higher levels. Where are we going to be headed? The latter, probably not the highest probability, but you never know. It is a lot of back and forth and a lot of different indicators showing a lot of different things in the market right now, which is always a sign of something interesting perhaps afoot. And by the next time we all gather here together on Thursday, listeners will hopefully know, and maybe we'll be in the teeth of it. We shall see, but unfortunately that's all the time we have for Around the Block. Also all the time we have for this Uncle Mike-less episode of the old option block. We want to say, again, our thoughts are going out to him. Hopefully things are going well over there. And if you do work with him or have any sort of communication, shoot him an email. Just say, hey, our thoughts are with you. I'm sure he'll appreciate that. And, of course, if you want to find out more, start on over to RCM Wealth Advisors for all that fun stuff he's always mentioning here on the show and how to get in contact with him so you can perhaps arrange for him to roll some puts and some put spreads and babysit some protection and, hey, pay for some protection so you can sleep at night. There are worse things, particularly in a market like this. And Mr. Rock Lobster, what else is firing off over there in the land of the pit?
I wish I had something good. We just had a great as far as what we're looking at or what we got coming up. I'm sorry.
What's coming up? It's like you have done this show once or twice.
Yeah, I know what's coming up. We have a event, our boot camp, our volatility webinar we had this weekend was our best attended webinar so far. So that's pretty good for us. And we'll be doing a boot camp with lots of volatility in it, September 30th through October 3rd. So those are the big things coming up in the pit. Cool
bean. Check out the recording if you haven't done so already over there at optionpit.com. you'll spend a little money, but you'll probably save some just in the vol you would have spent otherwise. How much money you would have spent buying vol you perhaps shouldn't have, or perhaps selling vol you shouldn't have. That's probably the more salient point of the two. Check it out over there, optionpit.com, to learn more. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great and sometimes lengthy questions. We love them all. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.